After studying this module, you shall be able to know the difference between services and goods. Learn the characteristics of services. Identify the sectoral growth of trade in services. Evaluate the classification of services, and lastly, analyze central product classification. According to Alfred Marshall, services and other goods which pass out of existence in the same instant that they come into it are of course not part of the stock of wealth. An individual uses services every time, every moment of life, ranging from watching TV, filing complaint for consumer treatment, for customer treatment, online transferring of money, chatting on social networks, visiting doctor, or traveling to different parts of a country. The world economy is nowadays seen as an economy of service. This is because of the increasing importance and share of the service sector in the economies of most developed and developing countries. Basic concept of services. Services versus goods. However, it should be clear that services are different from goods. Services are intangible deeds and processes. Services are those economic activities whose output could not be measured physically, but they are consumed the moment they are produced. Services are different for different tasks. For example, banking services are different from financial services. Educational services are different from customer services. All these services are intangible in nature, that is, these services cannot be heard, seen or felt. The few characteristics of services are intangible, ownership, heterogeneity, perishability, simultaneity of production and consumption. Explaining each point in detail, beginning with intangibility. Basic dissimilarity amongst goods and services is that goods are tangible physical objects. They can be touched, seen, felt, but services are those facilities which though could not be felt but surely can be experienced. Tangibility can be explained as suppose we purchase a cake. It can be seen, felt or smelled. But on the other hand, teaching is intangible service. Ownership in case of services means that customers derive value from services without getting ownership of the product. For example, a hotel room on rent, hiring of skilled labor. However, in case of goods, we get hold on or authority over the product. For example, the purchase of car, purchase of a flat. In services, benefits come from nature of the performance. Since services means deeds performed by individuals mostly, so no two services will be precisely homogeneous. Because of human interference in the process, the outcomes or delivery of service differs, as each individual every time has his own way of dealing with the problem. And so heterogeneity is there because of difference in services from different individuals and difference in services by same individual at different time frame. For example, on visiting a doctor, he behaves differently every time. Same teacher delivers same concept differently in different sections. Unlike goods which can be stored, saved, resold, for example TV, mobile services are perishable in nature. That is, they cannot be saved, stored, resold or returned. Because of its inseparable nature, services go waste if production and consumption activity does not happen simultaneously. For example, an hour of professor services are produced and consumed at the same time. The relationship between production process and consumption shows the sense of inseparability. For example, the students have to be physically present when teacher is providing the service of sharing knowledge. Telephone company which produces the telecom services needs telephone users to utilize the service. Participants in services. When services are provided, two categories of people are involved in the process or activity. One, the service provider, and other, the service receiver. Service provider faces problem in how to deliver service most efficiently so that they could minimize the cost of providing it, while at the same time satisfying the service receiver. The objective of firm, whether of profit maximization or to sustain long in the market, determines the quality of services. Service receiver prefers the institute or product when he is satisfied with the quality and timing of services. For example, in purchase of various daily appliances, customers often complain about poor after sales service from the organization, late deliveries by seller, late or no responses to calls for complaints and rude behavior of technicians. Types of services. Services are of two types: core services and supplementary services. Core service is a service that is primary purpose of the transaction. For example, service of lawyer, teacher, etc. Supplementary services are those that are provided as a corollary to sale of tangible product. For example, delivery option available for pizza on the minimum order of amount X. GDP of a nation depends on three sectors: primary, secondary and tertiary. Growth of service sector. Amongst these, it's the tertiary sector which determines service sector growth in a nation. Service sector includes telecom services, financial and tourism services, banking and many more types of services. Sector composition. On studying the economic history of India, it is evident that after independence, agriculture had the largest share in the gross domestic product of the country. However, after new economic policy, that is NEP of 1991, the share of agriculture started declining while that of service, that is tertiary sector, increased. After independence, the share of services in GDP was less than 30% from 1950 to 1960. From 1961 to 1970, it increased from 32.8% to 35.9% in 1971-1980. In 1991, after introduction of new economic policy, share of services increased to 45.7% over 2 decades by 2000, while that of agriculture has been declining, and in 2000 to 2010, service sector was having a share of 53.7%, while that of agriculture reduced to 21.8% in 2000-2010. From above numbers, it appears that growth of services accelerated in the late 80s. Even during the period of global slowdown, service sector remained resistant to external shocks. In 2009 to 10, the service sector grew at 9.96% compared to 8.81% growth in industries and 1.57% in agriculture. In terms of size of total employment, both organized and unorganized, in 1993-94, close to 63% of the population was engaged in agriculture sector and around 21% in services. Changes in employment structure. Over many years, the percentage of the people employed in agriculture sector has declined and employment in services has increased, though the broad pattern of employment has remained the same, with agriculture having the highest share. In 2009-10, share of service sector was around 62% of the total organized sector employment. However, within the service sector, over 80% of the employment has been in the unorganized sector. Subsectors such as finance, insurance and business services give organized sector employment, while services such as retail and wholesale trade accounts for unorganized sector employment. In 1993-94, around 86% of the total organized service sector employment was in the public sector, but in 2009-10 it declined to 75%. Overall employment in service sector in the country is low compared to its share in gross domestic product, yet the share is growing. The share of service sector is the largest share of employment within the total organized sector employment, but within services, share of organized sector employment is small. Trade in services. 4 modes. Trade in services involves export and import of services across nations. The 4 modes of trade include cross-border, consumption abroad, commercial presence, presence of natural persons. Cross-border means supply of services from territory of one member into that of other. For example, software services which are provided by a supplier in one country through mail to consumers in another country. By consumption abroad, it means services supplied in the territory of one member to the consumers of another. Examples are where the consumer moves, for example, to consume tourism or education services in the other country, ship repair abroad, where only the property of the consumer moves. Commercial presence involves those services which are provided via any type of business or professional establishment of one member in the territory of another. For example, an insurance company owned by citizens of one country establishing a branch by means of foreign direct investment in another country. presence of natural persons explains those services which are supplied by nationals of one member in the territory of another. It includes both independent service suppliers and employees of the services supplier of another member. For example, a doctor of one country supplying through his physical presence services in other country, or the foreign employees of a foreign bank providing services on a temporary basis. Liberalization in services. The economic and trade performance of any economy depends upon the efficiency of its service sector, as economies derive most of the employment and income from the service sector. Also, many services like financial, telecommunications and transport are vital as intermediate inputs for growth of the other sectors. Economies of many developing nations benefit from liberalization as they gain market access and could export those services in which they have a relative strength or comparative advantage. Access to foreign services markets is also relevant for developing countries to enable them to improve their export earnings and the employment opportunities for their nationals, and to bring the efficiency in their own economies for allocating resources efficiently for economic development. Global economic integration or globalization and technological developments have increased trade in services internationally and also providing many export opportunities for developing economies. The conventional concept of the trade in services hovers around the services that could be transferred across borders. This involves the separation of producer and consumer, for example, in case of mobile phones. According to the traditional view of economists, services are perishable and non-tradable in nature. Hence, there were neither any theories to acknowledge the possible problems of trade in services, nor any framework for the measurement of their trade. Bhagwati in 1984, the famous economist, analyzed the functioning of services sector, trade, and focused attention on the supply side effect of the service sector growth, and defined the supply side specialization as splintering. He discussed that there are two groups of services. One which require the physical proximity of the user and the provider, and the other group is of those services which does not essentially depend on the physical proximity because of technical advancement. The second type of services like banking and insurance is more in demand. On the basis of the growth pattern, service activities are grouped as fast growers, which include IT, communication services, financial services, trade and distribution services, and trend growers, which include real estate, legal services, transport, storage, personal services. During the 1990s, trade in services increased manifold. Technological change, communication costs, increased merchandise trade have played a crucial role in propelling the trade in services. Developing economies have the potential to attain greater benefits from liberalization compared to developed economies, mainly by liberalizing their own service sector. Domestic liberalization permits efficient allocation of resources as countries attain comparative advantage. A more optimum resource allocation improves the quality of service and overall economic capacity. Since 1991, the service sector has been opened up for private participation, both domestic and foreign. Services like construction, health and computer-related services are placed on automatic approval route for FDI. Telecom services experience greater amount of liberalization. Fully owned foreign firms have been given access in several segments of the telecom sector. Government monopoly in long distance telephone and internet has ended, and there are no restrictions on the number of providers. In several services, government increased the foreign holding limits to 74% from the earlier ceiling of 49%. Export versus imports. Despite significant rise in contribution of services to India's GDP, the trends in trade of services were not similar. The contribution of services trade to GDP was only 8.89% in 2005-06, increased from 3.38% in 1991. Whereas more than half of the country's GDP comes from service sector, that is 53.2% in 2005-06. With an average growth of 38.22% per annum, services exports as a proportion of world exports of services raised from 0.56% to 1.28% between 1990-91 and 2005-06. The growth of exports of services of India at 17.33% during 2000-2001 to 2005-2006 not only outstripped the corresponding import growth, but was also much more compared to world exports. Discussing composition of India's service trade, it could be said that trade sector of services are more modern, including financial, communication and information services compared to traditional methods of banking and tourism. In spite of outstepped growth in volume of exports of services during 2001 and 2005, shares of transport and travel services in countries' total services exports have fallen. The share of travel and tourism services reduced from 18.45% in 2001 to 12.79% in 2005. While at the same time, earnings from software services, that is $23.98 billion, communication services $2.18 billion, financial services $1.70 billion and insurance services $1.05 billion in 2005-06 were the most remarkable achievements witnessed by India in recent years. While import of services were equally high over the same period, imports were mostly driven by communication, construction and insurance services. The decline in transport services imports was quite steep, from 42.28% to 20.90%. Transport and travel services together still share about 1/3 of country's services imports. General Agreement on Trade in Services, also called GATS. According to World Trade Organization, General Agreement on Trade in Services, that is GATS, was the landmark achievement of the Uruguay round, whose results entered into force in January 1995. The GATS was inspired by the same objectives as its counterpart in merchandise trade. The General Agreement on Trade and Tariffs, that is GATT, criteria of credible and reliable system of international trade rules, ensuring fair and equitable treatment of all participants, that is principle of non-discrimination, stimulating economic activity via guaranteed policy bindings, and promotion of trade and development through liberalization. While services at present is accounting for over 60% of global production and employment, they represent no more than 20% of the total trade, that is on BOP basis. This seemingly modest share should not be underestimated. However, many services which have long been considered genuine domestic activities have increasingly become internationally mobile. This trend continues owing to the introduction of new transmission technologies. For example, electronic banking, telehealth or teleeducation services. The opening up in many countries of long entrenched monopolies, for example, voice telephony and postal services, and regulatory reforms in hitherto tightly regulated sectors such as transport. Combined with changing consumer preferences, such technical and regulatory innovations have enhanced the tradability of services and thus created a need for multilateral disciplines. Classification of services. According to General Agreement on Trade in Services, services can be classified into 12 categories: business services, financial services, communication services, health related and social services, construction services, tourism and travel related services, distribution services, recreational, cultural and sporting services, educational services, transport services, environmental services and other services not elsewhere included. Basic classification. Classification of services can be done on seller related basis. Thus, service marketing organization can be classified depending on whether service marketing organizations are private or public, and within each grouping whether they are profit motivated or non-profit motivated. The function performed of the organization too may be used as a basis of classification. For example, organization may perform educational, health, insurance or financial functions. The source of income may too be used as a basis of classification. Service marketing organizations may arrive at their income from taxation from the marketplace or from a combination of sources. Buyer related bases include the type of market, whether consumer or industrial, the way in which the service is bought, whether as a convenience, shopping, specialty or unsought service and the motives for purchase. Whether the motives for purchase are instrumental, that is, the service is a means to an end, or expressive, which is a service is an end in itself, may also provide a useful framework for classifying some services. Classifications which are service related in terms of service form, for example, uniform or bespoke, human based or equipment based, or involves high levels or low levels of personal contact. Central Product Classification, that is CPC. The Central Product Classification is the classification based on the physical characteristics of goods or on the nature of services rendered. Each type of good or service distinguished in the CPC is defined such that it is normally produced by only one activity as defined in the International Standard Industrial Classification of all economic activities called ISIC. The CPC includes products that are an output of an economic activity, including transportable goods, non-transportable goods and services. The classification structure comprises sections 1-digit code, divisions 2-digit codes, groups 3-digit codes, classes 4-digit code, subclasses 5-digit code. The main function of the CPC is to provide a framework for the international comparison of statistics dealing with the products. CPC serves as a guide for developing or revising existing classification schemes of products to make them compatible with international standards. The CPC was developed to enhance harmonization among various fields of economic and related statistics and to strengthen the role of national accounts. It provides a basis for recompiling basic statistics from their original classifications into a standard classification for analytical use. The CPC comprises of a comprehensive classification of all goods and services. With regard to services, no international classification covering the complete spectrum of outputs of various services industries was available before the development of the CPC. It gives less detail compared to other specific classification systems. The CPC provides categories for all products which could be of domestic or international transactions. It focuses on the products which are outcome of economic activity like transportable goods, non-transportable goods and services. The need for introducing CPC has its origin from initiatives in the early 1970s to harmonize international classifications. In upcoming of those initiatives, a standard products classification was a key element. Based on the recommendations of an expert group by the United Nations Secretariat, the Statistical Commission at its 19th session in 1976 approved a program for harmonizing the existence of activity classifications of the United Nations, the European Communities and the Council for Mutual Economic Assistance, and for simultaneously developing a system classifying all the economic activities and goods and services. The development of new CPC classification regime was intended to provide a basic tool in this program. The first completed draft of CPC was reviewed by Statistical Commission in 1987. The provisional CPC, hereafter CPC Pro, has been published by the United Nations in 1991. The CPC Pro was supposed to be revised, updated, and after finalization can be presented for adoption to the UNSD as Central Product Classification version 1.0. Hereafter CPC 1.0. The CPC 1.0 was published in 1998. Special attention was given to services part of the classification for ensuring that the structure of CPC is adequately reflecting new technologies and growth in services sector of the economy. The expert group approved the establishment of a technical subgroup to the expert group. The United Nations Statistics Division and the technical subgroup established warm working relationship with the International Monetary Fund, that is IMF, and the WTO Secretariat, as CPC was used as a source in the context of the preparation of GATS. The update to CPC 1.1 was concentrated on improving the structure and details of selected sections of CPC 1.0. The set of CPC updates for 2002 also covers telecommunications. A more detailed structure by type of telecommunication services has been provided, named as carrier services, fixed telephony services, mobile telecommunication services, of private network, services of private network, other telecommunications, and distribution services. CPC 2.0, which covers complete spectrum of various industries output, also serves the differing analytical needs of statisticians and other users. It does serve as a guideline for the elaboration of classification for specific areas of the economy, including international trade in services. Classification of services has various benefits. It helps focus on important aspects of services and filter out irrelevant details. It also helps organizations to figure out what type of services they own and can be used to support decision-making process, the architecture process, and new projects that want to reuse existing services. Classifying services into categories helps to decide what guidelines should be followed, best practices and technology to apply per type of service. Thus, this helps an organization to create better services. Let us summarize. In this module, we have discussed about the concept of services. By services, we mean deeds which can be experienced. The various features of services are intangibility, inseparability, perishable in nature, and no ownership. Service sector has been evolving over years and people are more inclined towards service sector compared to manufacturing or agriculture. In context of India, post new economic policy of 1991, service sector experienced a growth in its share in national income. There has been drastic change in structure or composition of service sector. People were too more attracted towards getting employment in this sector. The trade in services depends on four modes of supply of services: cross-border consumption abroad, commercial presence, presence of natural persons. With introduction of liberalization and reduction in policy regimes of nation after 1991, there has been improvement in trade of services. Imports of travel services declined sharply, while of other sectors like communication have experienced a rise. Classification of services is made on the seller-related basis. Thus, service marketing organizations are classified on basis of private or public, and within each grouping on the basis of profit motivated or non-profit motivated. The function performed of the organization too may be used as basis of classification. Classification of services can be or cannot be beneficial. It can be beneficial because it helps in defining the goal first and hence help in efficient allocation of efforts, while the demerits include spending time and money on research and development, maintaining records.